Hello and welcome to my CEO interview on core finance. Today my guest is Colin Harrinton, the CEO of Zephyr Energy. Welcome back, Colin. Great to see you again.
Very nice to see you as well. Hope you're doing well.
Yeah, indeedy. Well, not as well as Zephyr Energy by the looks of it, because every time I pick up a paper or something, it keeps getting better, and it's a tribute to you and your excellent management that that's the case. But and I know you do a lot of these interviews, but I wouldn't mind, for those who haven't, maybe just a quick overview, and then we'll go into some details of what you've been up to lately, if that's okay.
Yeah, happy to. I mean, so Zephyr, as you know, we've discussed many times, it's a U.S. focused Rocky Mountain Basin oil and gas producer. We focus on two sets of core principles: being responsible stewards of our shareholders' capital and responsible stewards of the environment. We've just announced carbon neutrality across our operations, which I'm very excited about. I'm sure we'll talk about, but really sticking to our knitting. We've got a large operated project as well as a growing non-operated division, and it's nice looking back at the last few months through this exercise in the interims and really taking stock of what we've done, and also it helps us position for the next few months.
Excellent. So where are you on the State 16 well, with the where you've had the original success and where everything has grown from that? What's the time horizon? What's the plan for that?
So that well, as you remember, has been drilled and completed. We've completed a pressure test on it most recently. To step back, we've done a huge amount of work. One of the things I'm most proud of our team over the last 9 months is how much work has gone in behind the scenes to evaluate each of these measured steps we've taken, from originally getting core and logs to doing the wire lines, more recently through the horizontal. We've got 4,500 feet of well that's landed in the Cane Creek, which is the primary reservoir we're going after, and now we have to complete it. So that's the next step. We expect the completion crews to be on site in the first half of October, so first 2 weeks of October. And from there, it's a relatively quick completion. It'll be under a week to complete the well, and then we'll move straight to production testing from there. So it's coming very soon. There are a bunch of challenges in getting everything together, as I'm sure you're aware, but we've done a good job so far sticking to our timelines, and I hope to maintain that streak now.
So when you having said that about the well, we know that's the plan in the first 2 weeks of October. What do you think your options are at that stage from there on?
Well, we're viewing this as a proof of concept. This will be a hydraulically stimulated well. It hasn't been done in this part of the basin before. You haven't even seen many horizontals. So with modern completion crew, with the right design for that stimulation, and the good location that we have, we are excited about this test. But there will be other things that we do in the future, because what we've seen from the analysis we've done, we're going to have many bites at the apple here. And one good example is that this is a 4,500 foot lateral. In the future, when we drill these, we'll try to drill 10,000 foot laterals and scale up production and reserves for each wellbore accordingly. But this one lets us begin to test this, begin to test the design, and hone on how we're going to complete them in the future. And like I said, we've got a lot of potential both between the Cane Creek Reservoir and the overlying reservoirs to target those in the same way in the future. So there'll be a fair amount of learning to come, and a lot of activity, I hope, across this acreage in the near future.
Excellent. You've had interims today, which detailed 6 months of what you call tremendous progress, and there's no doubt that that's been the case. If you can remember all of the milestones, it'd be nice for you to run through where you've got to in terms of self-sustaining, in terms of cash and the operation milestones that you've had already, and so on. One or two of the items that you've ticked the boxes for in the last 6 months.
Yeah. Well, I think first and foremost, as we've already mentioned, the paradox, the progress there. I'm absolutely thrilled with the analysis that's come out. And it's not just from our team, but it's third-party specialists and the University of Utah's Energy and Geosciences Institute as well. Huge amount of work that goes on, and each step of the way, whether it's been the logging, the cores, the pressure tests, we've gotten great indications. So, I'm really happy with how that's gone and how the actual drilling operations went, particularly on this most recent part. We got it exactly where we wanted to be at this point. So that's been exciting. Of course, on the non-op side, we've gone from not having any non-op exposure and no production in this company at the beginning of the year to, ending August at over 500 barrels of oil equivalent a day. And we had some of that come through in the numbers here. We were averaging about 148, I think, in the second quarter. That production is going to continue to grow. I think we've demonstrated that we can do acquisitions and develop the Paradox at the same time. We've completed 4 acquisitions in the Williston and some acreage in the Paradox. So, it was a lot to get done. The team has been working tremendously hard. I think the other thing I'm most proud of is, coming up, kind of envisioning and executing the strategy on the carbon neutrality front, which dovetails with our core business. I think it's extraordinarily important, and I'm really proud with how that's unfolded. There's going to be a lot of work to do. It's just the start of this, but I think it fits really nicely with everything else we're doing at this point.
Excellent. Well, that was my next question. Starting today, or probably tomorrow, if I read the result correctly, you're going carbon neutral in Scope 1 operations, and you're clearly very proud of it because you already mentioned it twice, and you've been looking forward to it. Tell us, first of all, what made you do it, and secondly, how do you manage to get it up and running so quickly? Because you're going to be a sort of beacon for other people in the industry here.
Well, and that's the hope. We're obviously still a very small company, so I think it was easier for us to deliver on this, starting from a cold start earlier this year. We really do believe that focusing on the ESG side is going to be helpful for the overall business. Not obviously environmentally first and foremost. We think it's important for companies in our industry to do everything they can to mitigate the emissions, because we're all positioned better than anyone else, I think, to cut carbon emissions. It's important that the industry do that, and not just coming from external or non-engaged parties. So we also think it'll help economically. We're seeing premium pricing in the marketplace through other gas sales that are being done, and hopefully we'll have much more to report on that in the future. So I think economically and environmentally, it's the right thing to do. We're developing the Paradox asset with as minimal a footprint as possible, and I think that's going to bear its own fruit for how we do this. So,
being responsible stewards of the environment and on a budget.
Yes, exactly.
Well, we've done the
in something that's already our core business. I didn't want to step out into something that our management team isn't used to operating, like a solar plant or a wind farm. Yeah. This ties really nicely with what we're doing.
Good. Well, we've done that. That's the last few months, and where you're sort of starting from today, 1st of October. What are you planning next? After all, you can't just sit around and do nothing. Clearly, you've been very busy, but there's more to go. In your report, I think you called it a flurry of corporate and operational activity on the go, to include more obviously work everywhere. What are the plans for the next few months?
I mean, the immediate thing is obviously getting the completion done in the most effective way possible. And I know you're aware of this, and obviously we read the reports from the UK, but the supply chain issues here in the US are real.
Coming back to that,
yeah. Trying to find truck drivers to bring the water and sand out to the site. We faced this entire year and have managed to execute according to timeline, but that is a challenge. We're working through it. We still hope to be able to get this done, but that's our primary focus at this point. But there is always the potential for us to do other acquisitions. We've signed a JV with a great team that's on the ground up in the Williston, who's been helping us parse through quite a few deals. And when we find ones that make sense, we will certainly jump and do them. And we've demonstrated the ability to both do acquisitions and progress the Paradox at the same time. And absolutely, it would be my fondest hope to do a few more of these and get the scale and cash flow that the Paradox will deserve, over its, what it will need to be developed. We'd like to continue.
And the JV you've done is interesting as well. Talk me through that.
Yeah, this is a team I've known for a very long time, 2 decades or more. They were most recently with a private equity-backed sponsor who gave them a budget to go out and build up a non-op a series of assets in the Williston. They did a great job. They deployed about $70 million. And when that sponsor pulled back from the E&P market overall, we wound up being able to utilize their team, their co-investors with us. And they've really helped us just expand our presence and our deal flow in the area. So I'm really happy with them and look forward to bringing others over the line here in the near term.
I mean, you mentioned briefly the supply disruptions. We've had them over here as well. And as you mentioned, we've got fuel shortages and beer shortages and all sorts of things. But
so sorry.
Some people over here put that down to Brexit, but over there it must be COVID and the way that the economy sort of crashed down and then picked up so quickly. What's the
Yeah, I think so. It's COVID is a big, has played a big role. It's also just labor shortages at this point. There aren't enough drivers, and that's really the prime example for us. But also, our industry went through a big downturn, and a lot of people left it, and it's now challenging to find people. The last thing has just been weather. We've had extraordinary weather. I mean, we had a flash flood on our site, on the road leading out to the site during our defit, which meant we had, no ability to access to get on or off for a day. We've had mudslides on the interstate that leads out to the site, which closed the main thoroughfare and railway for 2 weeks. So it's been an interesting environment, between pandemic, weather, and just global supplies. But again, we try to prepare to the extent you can for these things, and hopefully we'll be successful in continuing to hit the timelines going forward.
Well, you've done very well. I mean, there's no doubt that you wouldn't have, I don't think, I mean, I've been your biggest fan and said right from the beginning that I thought there was massive upside here. But, Zephyr has been a sensational performer. And I was going to say in the last year, until I looked up and found that, as recently as January, your shares were trading at 0.85p. They've multiplied that by 7 times this year already. And you don't look expensive. You don't look out of place at these levels. What do you think about the chance? I mean, you're planning to grow this into a much bigger business, aren't you?
Absolutely, without a doubt. I mean, I got very excited to step into this company because of the Paradox asset, and it really wasn't being valued at all. But there were reasons for that. They'd done a great 3D seismic shoot, but there wasn't a whole lot of available data or ability to grow it with the small market cap there was. And like doing things like the government grant and breaking the well into chunks and really being careful with how we measure the risk and reward and shareholders' capital exposure, we were able to start uncovering something that was really interesting. And I keep using the analogy as this series of green lights, but this looks, from my standpoint, like it will be, a many well development if we prove it out the right way, and we're on the cusp. So I'm excited with how it could unfold, and we'll know very soon on this first well. But I definitely want to focus people on the fact that we will have multiple bites at the apple here. We've now got enough cash flow from our non-op interests with these strong commodity prices and the very low acquisition costs that we had going in, that we'll have some dry powder to continue developing this and looking at longer wells, better spacing, and we'll continue to plan and develop this. It's just a question of how fast we can do it. I'm impatient. I'd love to do it even faster.
But I remember we met in sort of May of last year. You were just getting to grips with this, and I met Rick Grant as well, and I have to say I was monumentally impressed by you guys as a team and your ability. And one of the things is not just the way that you've done the well, the 16 well, but the fact that you realized that if you can get production wrapped around it, in operated, non-operated, in the JV, you're always going to have opportunities, and you guys seem to be people who can do deals on that front, which is good.
We built our board and our team with a much bigger company in mind. We wanted the capabilities to be able to get deals done, to have the relationships that, for example, Rick brings, long track record in the space, and he's run billion-dollar companies.
Yeah.
He is somebody who's really helped us, both with the deal flow and also just help us think 3 or 4 steps in advance for how we want to build this out. I didn't want to be a single asset company, and I think we're, these interims, it's been helpful to look back and realize how far we've come in a few months, and it's
well, it's been
from my standpoint.
It'll be a business school model one day, I'm sure. But as we get to the end of the chat, the usual question is trying to put everything together that we've talked about, the history of the last few months, plans. I think we've got a pretty good idea, but I always say, where do you expect to see Zephyr in 12 to 18 months? And without giving away any clues, but your hopes and thoughts for the next 12 to 18 months, Colin?
Our ambition would be a lot more development in the Paradox and a bigger cash flow platform to fund that development. It's nice being able to pair and balance development CapEx on one side with cash flow on the other, and really try to layer things in. And so I would like a bigger engine and go do a bigger development. I don't know if we'll get there, but that's our goal. That's what we would like to get to.
Well, so far you've shown every sign of being able to do it. I think there's so much more upside. You've got yourself the beginnings of what's going to be a really big and good company, and what is more, as I said before, responsible stewards, which other people look up to. So without being too creepy crawly, I'd like to say thank you very much, Colin, for joining me again today. It's been great to see you.
My pleasure, and thanks for the chat, as always.
It was absolutely, the pleasure was all mine, and thank you very much indeed for Colin for joining us all the way from Utah. At least he's not on the back of a truck this time, like he was when I first interviewed him. Today on Core Finance, my guest has been Colin Harrinton, CEO of Zephyr Energy, and I'd like to thank him very much for joining me, and you very much for joining me as well. Thank you very much indeed. Bye now.